Hi everybody, this is Seth Martin, and this is the Middle Class Investor. Thank you for coming in today to watch the video. It is May 24th, 2015, Sunday, and we're looking at, this is a chart of the S&P 500, a weekly chart, and so each one of these bars is a week, and you can see right here that we had an up week last week. The market reached a high of like 2135 or so it made a new high. I'm not sure it made a closing high. I'd have to look at that. And then it sold off and closed right here below, around 2125, 2128, something like that. So you can see here that we're at the top of this trend line that makes up this converging channel. Whoops, that didn't work very good. And here's the lower trend line. And so you would expect, I would expect the market to turn and go this way. Now, the question is it going to turn and go this way and then bounce, and give us another new high? That's certainly possible. But you can see the amount of overlapping action here. As price continues to narrow, and we've talked about this before, there's less and less opportunity for traders to make money. So it's very difficult once price begins to narrow like this. You almost always have some sort of price failure to the downside, and I would say that the near-term support for that type of failure is right around here in this 2030, 2020 area on the S&P 500, so about 100 points. That's not without, some loss of money. The larger pattern, this orange line, the risk is, goes all the way back to about 1880 or so. So there's some risk in the market. I think it continues to build. I don't know. I guess there's people holding hope beyond hope around what the Fed is doing, and so I hope this is not going to be a problem. But the server wasn't working earlier for TD Ameritrade, and we may have a problem here. No, we got the VIX came up. So with the market being up, you would expect the VIX to be down, which it was. You can see that here, and the VIX continues to kind of chop lower with these bursts to the upside. So there's definitely not a ton of fear in the market. In fact, there's almost no fear in the market. So I know there's a lot of people talking about the market could roll over, the market could do this or that, but if you really look at some of the statistics around sentiment, the market is actually, the participants in the market are almost as bullish as they've ever been in history. So even though there's some talk out there about the market potentially rolling over, and I suppose there always is, the sentiment is for much higher prices. Now, we've talked about this before, but when sentiment, it's kind of like a raft, with a bunch of people on a raft. And if everybody gets on one side of the raft tends to tip over. So sentiment is very much the same way. When everybody's on one side of the sentiment feeling about the market tends to prove all those people wrong and flip the other way. So, but having said that, the sentiment indicators have been bullish for a long time. I mean, they've basically since 2011, but they continue to push the upper boundaries of almost records, and I think that portends probably bearish prices in the future. And since the price action is very narrow around this S&P 500, a close below last week's high would probably break us out into that lower area that we were looking at earlier, that 2030. So just be on the lookout for that. Doesn't mean it has to happen or anything like that, but it sure looks challenging for the markets. VIX really is just kind of chopping around here. probably nothing's going to happen in the VIX until we break out of this red channel that's descending here, and then probably we won't revisit these lows. Once we break out of this channel, we probably won't see these lows again for a long time. So that's probably what we'll look to see happen. So we'll look to see the VIX move out of this red channel here to the upside, and then we can probably say that the market is in the process of turning or has turned. I've got Germany trying to pull up, but the server is very slow, so just bear with me here. We might have to switch to NinjaTrader and just look at some charts in NinjaTrader rather than mess around with Thinkorswim, because they might be doing some maintenance. Sometimes they do maintenance on these trading platforms over the weekend, and that's probably what's happening. I'll give it one more chance, and then we'll try to go look at the interest rate, and if we can't look at that, then we'll just switch over to NinjaTrader and we'll do this week's report from there. Yeah, it doesn't look like it's going to happen. So let's switch over to NinjaTrader and look at oil. Oil has moved up into this this decision point area. This is a daily chart. Let's look at a weekly first. The big picture on oil is we're looking for oil to move up into this zone here north of 70. And it looks like it's on its way to making that. It could pull back first and then make another run at it. But oil prices are definitely rebounding some, but we don't expect them to rebound much above, the middle of this area. So around 78 or so would be, and my guess would be that would be about the top of the rebound, and then we would roll over and start making lower prices again. Gold. My chart is messed up on gold. Let's see, I'm looking at a daily chart. I really did a poor job of managing that trade in gold and ended up just kind of breaking even. But after living through this little downturn right in here, holding through this area right here, where it went down, ended up selling. I ended up going up here and then coming down again, and then I sold, I think, on this day, if you can imagine, that day right there, after this big run up. So it was ended up kind of being a break even in gold. So managed that poorly. We'll get another chance to get into gold. I don't think that chance is there yet, so I'm kind of sitting on the sidelines. And ultimately, I think gold is not going to take out. I think gold will make it up into this area, but I don't think gold is going. I don't think the trend has changed in gold. I think there's a little bit more downside in gold. It just anytime you have a big, I'm not going to bring up the weekly chart here, but y'all have seen this big run down from back in 2011. Anytime you have a big run down, you have a little bit of upside to work that off, and then it tends to kind of stay down. I mean, this is probably a very, very, very large trend, and gold's probably 3-4 years away from making, maybe not that long, maybe 2 years away from making its low. So let's see, what else can we look at? We can look at the DAX. It looks like the DAX is just kind of chopping sideways here. It may be trying to top. Sometimes this is the way the market will top. It'll you can almost see kind of a rounding here, where the market kind of rounds down, and so sometimes the market will top like that, and maybe that's what's happening in the DAX. Let's see if we still don't have our. See if we can get the 10-year up. The 10-year Treasury came up earlier. I don't know if it's going to come up now or not, but let's look at bonds. Bonds have been selling off pretty hard. This was a pretty tough move in bonds, causing rates to spike a little bit, and looks like they kind of want to. may not make new highs. It might not get up here into new highs, but certainly bonds look like they want to go higher short term, and with the possibility of getting up into this area here. While we're seeing if the yield, here's the yields. So here's the 10-year Treasury yield, and this continues to be, I think, one of the most important instruments to look at in the market right now. And you can see here that we had this midpoint of this week, of this bar right here for this week, and we drew that in as support, because a lot of times that midpoint will, if it's a large candle like that, it'll act as support. And of course the market pulled back and it did act as support and ran up here. And it's interesting how it's just kind of stalled here at this descending trend line that we have right here. But I think it's probably just taking a pause. It's probably going to pause a little bit, and then shortly you'll see this 10-year take out this descending trend line once and for all. And if you're holding bond funds, you really ought to consider moving that money to something else. Bonds are going to lose a lot of money. These initial moves, I know it looks kind of sleepy right now, but it's going to pick up steam pretty rapidly when it starts moving in this direction. So rapidly that you're not going to have a whole lot of time to adjust to it. So you might want to consider scaling back or moving your bond fund money into other instruments at this time. Let's go over here to let's look at the dollar. The dollar, it's interesting with this run up in the dollar. Let's pull up a weekly chart. There was a lot of talk about the dollar and how a lot of people jumped on board. What's interesting is people didn't really jump on board on the dollar trade until in this area right in here, which I thought was interesting. That they basically were very, very late in the trade, and probably lost money, I would guess. I mean, if you got in here and then it pulled back hard on you like this, you probably lost money, and it pulled back so hard that you probably decided to sell. But the dollar looks like it's wanting to bounce here, and we kind of drew this in a while back and put the support box in. And if we zoom in, you can see. I'm going to zoom in on I'm going to put it on a daily. You can see that the market pretty much did just that. It pulled back pretty hard actually into this box and then bounced. And all I did, this box, it's nothing magic here, because some of you I'm sure are going, God, how does he know how to draw that box here? You can see how the price kind of narrowed right here. See how it kind of does this right here? There's kind of this triangle. This is pretty common as a market's moving up. You get this triangle kind of narrowing, and this creates a level of support just below the apex of the triangle. So that's why I drew this box right there. So there's nothing magic. This is just after you look at the markets a lot, you see these patterns emerge over and over again, and the reason we do that is just so when I'm looking through a bunch of charts, I can see, oh wow, this is about to pull into support, and I may want to take a trade in this area somewhere. So that's why I do it, and also to talk about it here so that you guys can see kind of clearly where levels of support and resistance are. So I would look for the dollar, not to move straight up, but it will take out this 100.785, and probably you're going to see something around this 103 area, and we should put a box up here. I won't do it right this minute, but we'll put a box up here later so that we'll have a good target for resistance on the dollar. Let's look at, what else can we look at? Let's look at the euro. The euro continues to be in the news, and especially there's a lot of talk about Greece. Greece, basically defaulted before, and Greece is going to default again on this new round of debt creation. It's they just can't seem to get it right. They restructured their debt, and then they let Siemens and all these Northern European countries come in there and build bridges and build light rail systems and all this kind of stuff in Greece, which effectively caused them to take on even more debt, right? And now they're just not able to pay it. I mean, they have some nice things, but they're always on the backside in terms of paying for it. And so Greece, you're going to hear more and more about Greece. Greece is not doing well. I don't know if the European Union is going to keep Greece or if they're going to kick Greece to the curb. It's hard to say. Who knows? That's probably a political question. But you're going to continue to hear more and more about Greece because it's just an albatross around Europe's neck. And there's other Spain and Italy aren't far behind, but Greece is not the systemic problem that you see with more like Spain and Italy. There's not a lot of leverage to Greece other than what they owe in the way of bonds. So, but you're starting to hear a lot more about them again. It's just, I'm sure we're going to see more riots. They got a new guy they elected that said, yeah, we don't need to pay these things off. He's kind of snubbing his nose or thumbing his nose at the European Union and saying we don't need to pay these bonds off. And basically, they're just a week or two away from bankruptcy. So look for there to be some exciting things happening in Greece. I don't know that I would try to go buy Greek bonds here if any of you are trying to do that. Last time that was a good trade when there was a lot of fear, but I think there's a lot more exhaustion here with the participants, the people the people lending the money and also with the Greeks themselves. And I think this time you're probably going to see a default that results in loss of principal. So, but the euro, pretty much if you zoom in on the euro here, and again, this is kind of you can kind of see a little triangle here. So it makes sense that the euro found some support here. You can kind of see this triangle right here. And then had we drawn a box, it would have been, probably right in this area. So it found some resistance there and has backed off. So now, does that mean it's going to make a lower low? I don't really know. The next level of support is down in this area right here, below this 105 area. So I would say near term, look for the euro to pull back into this 105 area, probably bounce and go higher is my guess. But we'll watch it more closely as it develops. But it's going to make for some interesting TV time. There's all that rioting and stuff is going to start up again. It's going to be a big mess. So let's see. Let's go back to our. Let's see if we have Japan. See if we can pull up Japan. I don't know if we can or not. Probably not. I apologize for this, you all. The server, I guess, with Thinkorswim is just, it's not, they must be doing some maintenance or something like that on it. Let's look at the ES here on NinjaTrader. We'll look at a weekly. If you're a daily trader, it's really difficult right now, the market. You can see I've got some Fibonacci stuff drawn here, but you can kind of see how this is. It went down, it went up, and it went down less. It's gone up, longer, but not as much. So you have this narrowing of prices in this area here. Sorry about that. You can just see how pricing has narrowed. You get a narrowing here. and a narrowing there. Well, this line moved. Why did it do that? I guess it was too flat. So you can see we kind of prices go like that, and then these prices down here kind of go like that. So you can see this convergence. And we've talked about this before about how hard it is for traders to make money. It's easier for traders to make money when you're at resistance and you're looking for a sell-off down into this zone. That's a decent move. And likewise, this is a decent move up. But when you start getting here and you're looking for a move from this side to this side, those aren't very big moves, and it's harder for traders to make money. And so usually something happens like, it could be a spike to the upside or it could be a spike to the downside. And the odds are, only because the trend is up, the odds are there's going to be a spike to the upside. But you have to kind of look at that in terms of how long this uptrend has been in place and how long uptrends are likely to stay in place given the length of time in this particular bull market. So let's look at some shorter term just to show you guys how choppy all this is. These are daily bars here, and it's just been chop, 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 chop. So very, very difficult. And you can see I've got some DPs drawn in here. And of course, we're at the DPs. We're at this one, and so the likelihood is the market rolls down, probably down into this area here on its first move. But we could take out, before we did that, we could take out this high first and go a little higher and then come down. But the amount of gains that you're getting out of these little moves is really not worth the risk to the downside. So you've got so much more risk to the downside than you have gain potential upside. And when the market gets like that, everybody starts to see it, and they just pull away from it. They say, hey, it's not worth it. They go to the sidelines. The market tends to fall under its own weight once there's not enough buyers to push it up, and you have some sort of sell-off. So, and you can see here too, on the Ninja Trader oscillator here, it's kind of looking like it wants to. That was poorly drawn, but you can kind of see these are kind of making a pattern that is going to look like this, where it looks like it wants to roll over. So anyway, here's Japan. So we went away from Japan and came back, and it had finally loaded. And you can see Japan is trying to make its way up into this resistance area that we had drawn. I don't know, it could be another week or two, maybe 3, before Japan gets up into this zone. And of course, if you own Japan after it gets into the zone, you might want to step to the sidelines, because usually it will pull back. And I would say the pullback would probably be into that 12.9 area. Here's the UK. The UK tends to struggle. It's continues to struggle in this resistance area off of this swing here. So what we did is there's a swing from here to here. So this is called a pivot. You might hear me talk about a swing or a pivot. And what we do is these DPs are just zones of resistance of support on the next move up. The cool thing about them is I could have drawn this pivot right here, right, before all this price action gets here. So it actually kind of tells you where the market is likely to move next. For example, we're in this DP resistance area. Where's the previous pivot? Well, the previous pivot is right here. Okay, so we don't know that the market's going to go down here, but the market tends to move from pivot to pivot. So now there's some shorter pivots in here, different time frame pivots, but the larger time frame pivot that we're going to be looking for is this one right here. And you can see this is on the chart in advance. Prices are up here, but our target now is down here. So if we got a candle next week that looked like, let's say it looked like this, where it closed below these lows right here. So you got to close below these lows right here. Then I think that would be a very good trade to short the UK into this zone right here. And you can see it's not a trade like a day trade. These are weekly bars, right? So you're looking at taking 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 weeks to get into this area. So that's not a trade like a day trade. That's a a quarterly trade or a half quarter trade or whatever. So when I say trade, I mean trade can mean all kinds of things. It can mean an intraday trade, like a day trade, or it can mean a trade that's going to last for 3, 4, 5, 6 months. So don't get too hung up on the word trading and have that mean day trade, because I know most of you are not going to want a day trade, but we certainly want to try to position ourselves to make good decisions, and those decisions typically we don't want to be more active than once a month or once every other month in a 401k. So, and I think the UK here is setting up for a pretty good trade for those of you that have stocks in the UK. I guess that is it for this week, everybody. The market, it continues to look very, very toppy to me, and we've had this bull market has lasted a long, long time, and the price action is narrowing considerably. These are all things that are usually negative for price action, and just be on the lookout for a spike in volatility, some more price action to the downside, things like that, because the market, it goes up on the stairs, but it comes down in an elevator. So you got to be real careful and not take that elevator ride down. It's no fun, and it takes a lot longer to get your money back. All right, with that, everybody, thank you very much, and we'll look forward to seeing you next week. Have a good week, everybody, and happy Memorial Day for all you veterans, or parents of veterans. Happy Memorial Day. Thank your servicemen and women for their service. It's a very difficult job, and many times these guys and gals are underappreciated. So happy Memorial Day to everybody. Take care. We'll see you.